Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, September the 9th, 2025. As you know, today is Tuesday, Gary's Market Forecaster, GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. High level overview, wave 1 is done. We're breaking down. The bias is this wave 2 temporarily stationed here is not the bottom. We anticipated a move up 3+ years ago that we're going to go down closer to 80 before we were done. Well, I just don't think this is done, but we have been chopping for a few months here, and I expect it will continue to break down. That's the plan. So as we've been talking about for several weeks now, any rallies, Randy, James, Ian, Mr. Tucson, Harold, any rallies should be sold because we expect this thing to continue to break down. Jumping into the charting platform, we can see why we believe that. So this little bit of a bounce should be continue to lead to these lower highs, lower lows, and just recently we started to make a new low off of this latest low, and we're kind of bouncing a little bit. So we still got that final level to take out, this swing point here. And once we take that out, then I think it's game on for us to go lower. Immediate targets, 96.70, 96.35. But from our perspective, this low up to that current high, we took out the 618. That was several days back, even weeks ago. And we've just been chopping in this zone, making lower highs, lower lows, kind of grindingly so. But that's part of the pogo stick, up, down, sideways to lower chop. So this is why I keep saying for the last few weeks, any rally should be sold. Any rally should be sold. And this is expected to continue to break down. Because we closed below that 618 level, the rule is we have a 75% chance we're going to go visiting 95.80. 70+% chance we're going to go visit 95.33. So all roads are leading to lower lows. And even if you take this prior swing point low, which again, we haven't quite taken that out yet on this downtrend, but from that low to high, we took out the 618 and the 786. We did that multiple times. So that is screaming, use our little animation of arrows here. That is screaming ever since over here when we took out the 618, 786 of this move. It stated we would have a 75% chance we're going to go visit the 96.70. And again, we just kind of chopped in that zone, but here's another close saying the same thing, and yet another close. And then today we'll see how we end up. Do we rally up a little bit more, or do we end up pushing back? But regardless, several days already over the last few weeks stated we were likely headed down to this 96.73, 70% chance 96.35 area, which sets the tone. Once we do that, this bigger move, we take out the 618, 786. So then it goes on to continue to say the same thing. Any rally should be sold until we start to reach these targets down here. 95.80, 95.30. Amen? Pretty simple. So the biases continue to climb and claw its way lower. So these rallies will probably be fizzle manizzles and start to push. Why is that important? Well, we talked about that in the terms of our Forex pairs. Pound dollar, we entered this not only a long time ago, up substantial amount of pips right now, but from this prior entry, we were up over 300 plus pips, and we're trying to grind higher, but we talked about some targets. So I just did this as a class illustration, not that this was my initial entry. I've been in this thing, if you really want to know, we've been in this thing since the pound go out to a monthly. We've been in this thing since the pound was down here at 103. So we're up thousands and thousands of pips from that move. But this is just the latest buy the dips and continue grinding higher based on our rinse and repeat type of entries. And even with that most latest one we entered last week, I talked about that this is likely to continue to grind since the dollar is going to continue to grind lower. The euro and the pound, we're going to grind higher, and that's what we're seeing. So the good news is I do think there's more upside as this is going to continue to grind and grunt as the dollar does the same. Pogo stick sideways to lower. This pound dollar should pogo stick higher, sideways to higher, and we're expecting more upside. But notice the targets, 36.60, 36.50-ish, 38.80, 39.60. Where does that come from? That comes from when you go to the pound dollar, our target zones we've been talking about. First target zone from the prior low to high. Looking at this move, we got to stretch this over this direction, but we can see where the high from this high to this low, that's that 38.80 and 39.60 targets. I believe there's a high probability we're going to reach this 75% chance we're going to reach 38.80, 70+% chance we should reach this 39.60 area. So that's where the two larger targets. Where does the 36.50 come from? From this recent high to low, 36.50, 3,700. So this is why I kept saying we're going to continue to buy the dips. And what this looks like is an impulsive move back up after our three-wave correction, after the bigger move higher. Beautiful correction. Then we got an impulsive move up, yet another three-wave correction that did what, Emil? From the low to the high, it came down and tested that 618, 786 zone. Beautiful, right? I mean, it's like perfect movement. So this is expected to continue to grind higher, and we should expect this to go breaking out of the prior high, targeting this initial target. And then as we keep grinding, we should break the previous high over here, which brings us into the 38.80, 39.60 area. So that's where the software you can use to trade these. Not only did we set this up weeks in advance when we were talking about this three-wave correction, and I kept saying, we're going to buy this, but we want to get that daily oversold. We want to get the daily PAI trend momentum oversold here, just like we did with the euro dollar. We wanted to get both of those oversold. And the euro were up a few more pips as well, just kind of grinding. But remember, this wasn't the initial entry. It was way back here, which we're up hundreds of pips. And even before that, same rule, we started talking about buying this euro when it was down below parity at 0.95. So from 0.95 to where we currently are at 117, that's thousands of pips also. So this is why we can continue to use the software. Remember, we have tools inside the software you may not remember. It is a collection of strategies and indicators, or expert advisors in MetaTrader, strategies in NinjaTrader, and they're the same, got the same trade management systems, etc. So plot this on the chart. I do expect this is likely to grind higher as Tesla goes higher in the weeks and months to come. So I just entered this to show it does work on this platform as well. So you have your choice to use MetaTrader 4 or NinjaTrader 8 to do the same thing. And why is that important? Because when you know where the technical picture is leading, you have a great idea where it's headed. So the euro dollar, we have the same type of move. We have the impulsive move higher, three-wave correction, the latest grind higher, and we expect more of the same. So as I expand this view, so we could focus on some of these numbers, from this recent high to low, we have our targets right here around that 1850 up to about 1899, 1900. Well, if you take the prior high here to the low, then we start talking basically 1900 to 1950. So for the last multiple weeks, Emil, we've been talking about this going from 1850 to 1950 as our target zone. So again, we entered way down here on multiple entry. Before that, we had an entry down here that made and went to our extensions beautifully. And before that one, we had the bottom reversal down over here, which is total up, hundreds of pips now. And then the big move from couple of years back when we got that 0.95, we're up thousands of pips. But that's been the plan, to keep buying the dips in that bigger picture. Now, remember what these look like when we started talking about this so long ago. And we mentioned that this is the big picture, and we expect this to go much higher. Go back to my monthly view. And that was the plan from the recent high to low, at 0.95. As the dollar grinds downward towards 80, we expected the euro dollar to start grinding towards 135, 145 area. And so far, we're up thousands of pips in that multiple thousand pip journey. And yes, we're kind of breaking above the Magic Fibo on a monthly chart. That's expected. We kind of broke above, retested it. Now we're popping again. So I did mention that when we were going to go up and finally break the Magic Fibo, we would probably retest it before we continue higher. But this is not a straight shot. Markets never move in one direction. So even though I still think we got thousands of pips to go, and certainly hundreds to go on the smaller scale, that we keep buying the dips in the short term, we wait for the next correction, then we look to rinse and repeat, as we've been doing on a monthly chart for quite some time, since this bottoming here, right? So what are the targets, as we just mentioned, using the extension retracement rules? And that is up here at 1850 up to 1950. So notice when you enter it via your trade management system, come back to the daily, give it a bigger view, stretch that out a little bit. And we can see that we're expecting, what are the targets? 1850, 1950. So remember, this is on-screen programming. So whatever we talk about in class, and we say, well, Gary, based on this move, we should go where? High, low, break the 618. We know we look for the 1448, 1272, etc. type of move. Then you can set your trade management system, rinse and repeat on those type of moves. And this baby will sit here until it's time for it to break down, reach your targets, get to your stop loss protection, or we call that protective stops. And then if not, we continue to go higher, then we're expecting this baby to grind toward our 1850 target initially. And then when that one's reached, we'll look for 19 and the 1950. Got it? So we're up 60 something pips now. We're about 100 pips or so from our first target. But I do believe this is going to continue to grind. Why? The dollar index is expected to do the exact opposite. we're expecting this dollar index to grind lower. That's what I love about trading Forex pairs, especially dollar-based pairs. When you know what happens to the dollar index, you have a great understanding of exactly where dollar-based pairs are headed. Amen? So the more this breaks down, IKA reaches 96.70, 96.30, continues down even further at 95.80, 95.30. As that breaks down, that euro is going to continue to climb higher, reaching those targets, and the pound should continue to climb higher, reaching those targets, even though there's still a few hundred pips left to go, as this still has several more points to go lower, right? So that's the plan. We've been talking about buying the dips on the euro and the pound for quite some time since we got this recent reversal. And then we started, this is on a big, daily chart, but since we had this on the dollar index, we expected these rallies to fizzle. That's why we kept saying any rally should be sold on the dollar index, where any dips should be bought on the euro and the pound. Inverse relationship. So any questions on the dollar index? We expect these rallies to continue to make lower highs, lower lows, in this kind of chopping up, down, pogo stick, higher low, lower highs, lower low type of move. But we still have to take out this last swing point, which we're not quite there, this 97 area, right? We take out 97, we're sitting pretty. We're about 97 and a half at the moment. We did dip a little bit lower, but we're bouncing a little bit. So once we finally start closing below 97, then it reiterates from, again, that low to that high. Not only are we going to reach this target and that target, but it's screaming we're going down 75% to that target. 70+% we're going down to 95 area. And this is truly where I expect our dollar to push. Fair enough? Another thing we can look at that same scenario, if you look at the recent move of the dollar, where we had this recent high to lower high, that sets the tone for us to go potentially lower. But once we start breaking this prior move here, and we'll show it in a current example. Let me take some of these levels off real brief so I can kind of give you some insight to that this recent move, we have a high down to a low, to a lower, no, I want to use my 3-point tool, excuse me, wrong one, 3-point tool, and I'm going to show you it's going to overlap some levels. A recent high to this recent low to this lower high. What do we have? 94, 95 area, my green line down here. So if we start pushing the envelope of toward the 1618, pushing down into that 95 territory, from that high to this low to that lower high, we start pushing below these 95 targets where I think we're headed. Then it kind of sets the tone. This is even going to give another push even lower. So that's what I would like to see. That as we start breaking down further, we want to go beyond 96. We want to go beyond these little uprights here, the 1, the 1448, 1272, because if we start pushing down this, it'll look more than an ABC, but a 1, 2, 3, then we'd end up with a 4, 5, even pushing us even dramatically lower. So I'm watching that. We may have, what if that wasn't a low and we actually switch this a little bit? How about that original push from that high to this low, and then we get that as the lower high, right? So which one do you want to use? Well, this one certainly could be used as well. There's the high to the lower high, and we've been grinding lower highs, lower lows. And the same thing, look where this 1618 is, that 95 target. So if we continue to break down and this continues to exceed 96.90, 96.60, 96.30, and we push down toward this area, then it's more likely not an ABC. It's more likely a 1, 2, 3, 4, 5, which would push anything below 95 pushing down toward my green line level. And then we get a retracement. The likelihood we're going to go even lower is extremely high probability. So Ian, let's see where this finishes. Now, I don't mean just like we've been getting a lower low, then we get a little retracement to a lower high, and this and a lower retracement, lower high. I'm talking about if this baby starts, once we take this swing point low out right there, this should start to move a little faster to the downside. Take out that swing point. Then we have our extensions over here, that 95.80, 95.30, which is right in the midst of this. So if we start reaching those extensions, which again, we have a 75% chance to do it. What are those levels? Use your 2-point tool, go from that swing point low to the current swing point high, and there they are. Look how they bookend this 1618 off of the 3-point tool, high, low, lower, high. What does all this have to do? Confluence of events. If we already know, based on what we've been discussing, and how accurately the forecasts have been with the dollar expecting to continue to break lower, sell the rallies, sell the rallies. We've been doing that for quite some time. And 3 years ago, when it was at 114.72, what did we say? The dollar is going to go down dramatically over the coming years. And sure enough, we went from 114 down to 97, a low of 96 before this recent bounce, but we're grinding even lower. So if we see this thing continue to grind down and we reach these 75%, 70% target on this recent move from the high to the low to the lower high, that makes that look like a 3-wave move, right? 1, 2, 3. And then immediately we'd get some sort of wave 4 correction back, and then even another push lower. So I really would like to see this come down, break these levels, extend it into the lower 95s, if not even lower, that it would set the tone for, yes, another retracement, but yet another lower low. So why am I even bringing that up? Well, it's about defining our template here. Is this the end of wave 2? No. Is this going to be wave 2? Till price proves otherwise, why not? Right? It's a beautiful move from back here in 2007 all the way up to the 2022 high. We're expecting some sort of deeper retracement. And so far, we made it beyond the 38.2 on that bigger move. So could we come down here to the lower 90s and stop? Well, rule is wave 2, when it finally ends, whether it's here, which is extremely unlikely, I do think we're going to go lower, but whether it closes somewhere here or anywhere in between there and down here, at some point we're expecting this thing to go breaking out. That is the plan. Pay me now, pay me later. But I do think we're going lower. In the interim, we want to see that continuation type of move, and that is taking this swing point low out, reaching those extensions, followed by a 3-wave correction and another push lower. And you look at these and say, well, yeah, some of these are hard to find. That looked impulsive, and then you got this move and this. That's my job, is for the labeling and to give you direction. God-given talent to read and interpret price. But how do you utilize the tools we've given? Well, the forecast puts out numbers based on what we're looking at. So the dollar, we know what these numbers are. Just like if you trade Forex, I trade all markets. I love Forex. I started with Forex. Well, I trade stocks way back when too, but I love Forex. That was one of my favorite places to trade because it was so easy and simple to do. Once you know where it's going, yeah, it's a tough bid. All trading involves risk, substantial risk of loss. There is no such thing as safe trading where there is no risk of loss. But that's part of the beauty of trading. It's kind of exciting knowing I could lose something. When the excitement, when I study and I do right and I make money consistently, that's a beautiful feat that not many traders experience. Well, that's my job, is to get you in that mindset of how to set proper targets, when to take profits, so that if it doesn't turn out, then where do I cut my losses? A lot of traders think, well, if I don't close my losing trade and I don't really don't close, it's just on paper. Well, until you either have a large balance or you get a margin call, or the reality is that's not a winning strategy. Is, well, if I don't close my losing trade, it's not actually a losing trade. And hopefully maybe it'll turn around in my favor. Well, that's why we use protective stop. We get to certain levels. If it breaks that, then the likelihood it's just going to dip one tick lower and rip higher is extremely low. Bail on it, take the loss, and shoot for the next trade. But the problem with a lot of traders is they don't do that. They let losing trades run and cut winning trades short. So I'm here to break those bad habits and give you logical steps in which to follow, and how you can take day in and day out type trades, whether you're looking as a scalper, a day trader, position trader, investment trader. I don't know your personalities and what you're trying to shoot for, but that's why we give, 3 years ago, I gave a target about 6,000 pips, and now we're rinsing and repeating, and we're up like 3,000 pips and counting. And we're probably going to go up toward that 130 range. But first things first, we got to get to 1850, 19. Then we got to get up here to our 1950. So those targets intermittently, then you rinse and repeat and set the next tone. Amen. But that's why we talk about these tools we can use, and how do we use them? Well, remember this? We talked about this for weeks in advance when the euro was doing this correction. Peg that was going to come down into the cloud. We expected the daily to cycle down, and we were looking for this to happen. And I said, you could set your trade management system to buy that, put it in ready to trade mode, buy that trigger, and then it would enter automatically for you if you're not at your computer. Well, that's part of the beautiful tools. And we got in, we're in a position of authority, and then I went on to show in this one that I re-entered because I think we can still grind higher based on the technical analysis, that the dollar should continue to grind lower, so this euro should continue to grind higher. And then you simply just set it in there. And again, it's on-screen program. I can click on that and move it. If I think, oh, well, the market's not doing what I thought, I'm going to bring it a little bit sooner. If you're worried about it, you can even hit this BE+1, and that'll take your stop loss into profit so you can't lose anything. But I'm just showing it here, so there's many ways to do it. So if you're more comfortable, I'm up 60 pips, I don't want to lose that, then you simply just click that button right there, and it'll take your profit for you, and it's going to move your stop loss into profit, and then all is good, right? So I won't have any risk in that trade. So the worst thing that could happen, the thing could reverse and it'll pip me out for a little bit of profit. That means that trade is an absolute winner. It cannot lose, even if this thing goes plummeting. But my point is, I didn't want to take profit one because I think it's going to grind up to 1850 and then 19 and then 1950. So let's just continue to let it run. Then after we get up to those targets, you typically get some sort of little pullback, and we buy the dip and we look for future targets. And the same thing with the pound. Those numbers came from these high-low extension break to 618. Where do you go? 1448. And then where? 1272. Could we continue up to 141? Yeah. But you typically get these moves in a correction, a move, then a correction. So even when this thing was ripping higher, we'd move, we'd correct, we'd move, we'd correct, we'd move, we'd correct, we'd move, we'd correct, we move. On the downtrend, we correct, then we start grinding higher, Three-wave correction, grinding higher. So yeah, the plan is this continue to grind higher in the days, weeks, and months to come. So any dips should be continued to be bought and shoot for those targets we just discussed. And I'll just let the system run it for me while I'm doing it. As you can see, it moved the stop loss into profit. So right here, we got 55 pips of profit, 56 pips of profit. Stop loss is at 55. So this is a absolute winning trade no matter what happens, right? And then we'll continue to let it grind. And worst case scenario, it comes down, hits the stop loss, and we get out of the trade with a little profit, or we continue to grind higher toward the targets up and above, and we start to reach those. So just let it continue to do its thing and you're good to go. Amen? All right, let's continue. So what about the dollar yen? Again, Randy, as the dollar is expected to break down, this dollar yen is expected to break down. There is a regime change in Japan, so we'll see how that plays out, and we'll check on some things there. But regardless, the dollar is expected to continue to go lower. So by going lower, you would expect the weakening dollar. Is this going to help strengthen the yen? Maybe. Maybe they get away from that. You know, they've been in negative interest rate policy for decade plus, and then they changed and started raising rates a little bit from stagnation to stagflation, etc. So we'll see how that plays out, but our dollar is the champion right now. And what happens if we lose our world currency status? This thing's going to go plummeting, obviously. We don't want to see that, but anything's possible in these uncertain times. So I digress, but any rally on the dollar yen at the moment should be sold, just like any rally on the dollar index at the moment should be sold. Fair enough? Then when we get that wave 2 to end and the dollar index expected to go much higher, we'll talk about looking for a dollar yen trade back to the long side. But in the short term, whether you're scalping it, that's fine. But the bigger trade is this thing should start breaking down further. Pound yen, still kind of grinding, Randy. We got move up, we get moves down. And based on the bigger picture, I'm not convinced that there's any warrant for us to take a long position and hold this for the pound yen to go breaking out. It did rally toward maybe we went to 200. We got just shy of that target. We went to 199, 200.34. We just missed that 6.0 target. But I warned you, I said the most we could do is if we did get up here, I'd look to sell it, right? And we didn't quite get that high, even though we made a slight higher high. But the bias is lower. Go to a bigger picture. This is a lot of chopping, overlapping, grunting action. And I look at this frequently. That looks extremely impulsive down after our big run up. Remember, I was one of the biggest proponents with the dollar yen and the pound yen that we could be buying this carry trade 3 years ago and look for this baby to go ripping higher on the dollar yen. Remember, I made a bold statement way back in 23 that after they made this run and we got this pullback, I made a statement, as long as we hold above 127, we're going to 160 and above. That was pretty bold. Where did that come from, Emil? High to low, 160. Yeah, can't make this stuff up. And where did we retrace from down here? That 618 retracement off of this little consolidation zone breakout. That was the 618786 zone. So this is why when I was looking at this, well, it's good to be long the dollar yen back then because our dollar had high interest rate. Yen had a negative interest rate, and that's what you call the carry trade. So not only did we make thousands of pips by being in this trade, which is money, but we made tons of cash deposits every day because of the interest rate differential. So this thing grinded years later up to exactly where our targets were. Then we had that carry trade unwind in the markets back in 24. That was very aggressive. And I even told you then, from the high to the low, we're going to retarget at least 154 to 151 to 154 on a bounce, which will be over 1,000 pip bounce. But I really wasn't expecting this to start breaking out, but look for a lower high. And that worked out pretty good. And we went right to the zone of interest, and we didn't quite break out. We got that lower high, which is setting up what? Lower low. Got the lower high, and we've been double bottomed here. But even since then, we got yet another lower high. And that's why I still think the dollar, as the dollar index goes lower, this thing will correct lower. Then when we call a bottom on the dollar index, this year, next year, the year after, I can't tell you when it's going to be, but when it is, I'll be sure to tell you. And then when we expect that to reverse, then we'll look at going back long. And if it happens at the time where they're at a low interest rate and we're at a higher interest rate, then we get back with the carry trade added Louisiana Lagniappe bonus, which I always like bonuses. Always like the bonus. So any questions on that? Any rally should be sold in the short term. Pound yen, same thing. I was very bullish. Pound yen. This thing goes back years and years ago in the archives. And you come to the pound yen chart I have back here somewhere. Here it is, pound yen. And we go back, and I'm kind of holding a short trade on this at the moment just to hold a position on it. So I do think we're going to go lower in the coming weeks and months. But looking at this from the big picture, when this baby was down here in 2020, 2019, going into 2020, after this move and this correction, I made a bold statement. I don't do predictions, but I'd make bold statements. And I said, we should at least go back to that high and make a new high. And from 120 up to almost 220 would have been 10,000 pips. We got to about 210, almost 208, whatever it was. So I had a statement at the time, this would be about a 9,000 pip run. Took years. I even mentioned it would take years. Right, Mr. Walterstorff? William Bruce? Took years, but sure enough, it did it. Well, now we're expecting another bigger pullback. This big dip lower and all this overlapping chopping action, we're expecting this thing to go lower. And what's the software going to look like, Randy? See how this monthly's turning over? Looks like it's trying to slingshot back up. Well, what am I expecting this thing to do in the coming months? I'm expecting this red line to turn down, blue line to turn down, green line to turn down, the trend momentum that's kind of turned back up and pinching, turn back down. In the weeks and months to come, I'm expecting this thing to start pushing back lower. Well, we have this thing we call engage. When red and or red and blue races off from green money flow and snaps back, that's an engaged slingshot. But when you go from an engaged slingshot to a disengaged slingshot, the probability you're going to go back and retest the low there, that's where we, from the high, came down, and then we started slingshotting back up right there. So when that disengages, I'm expecting this to start pushing lower, and that's going to bring us back toward this swing point. So do I think we're going to make a new low below that? Yeah, I think we're going to make a new low below this one. That's the initial surge lower, then a three-wave correction, push lower. Got it? So just looking at the big monthly view, but I'm just going to hold this thing into oblivion and let it continue to go lower in the weeks and months to come. And that sets up this technical picture, the bigger move. And typically you get equality in those type of moves. Well, the size of this red arrow, or you could just use your high and lows to get a number, but there's the tools in here. You can use the arrow, which is this little guy right there. Actually, you can't see that. It's off my chart, but I'll bring it up here so you can see it. That's your arrow tool. And then you have your retracement extension tools. And then you have this little price range. There's many tools in here, but utilizing the 2 and 3 point tools does the same. If I take that high to this low to that lower high, that puts me in the same ballpark as using the red arrows. And we can see the red arrow in that tool is saying we're probably due to come down about 170-ish, make a new swing point low, come down here below 180 into the 170-ish area. We'll see how that plays out. Well, when it starts to get real interesting, let's go to a daily and take that recent swing point low, 184, in this recent rally, which we're just kind of grinding in this big rejection zone. So here's the big move, high, low. That was the carry trade spinoff, unwinding in 2024. And then we see what? Overlapping, chopping, highs, lows, higher highs, low back into the area of the high, then another high, lower high into the same area, but the next low back into the lows, and then another high back into the low. And even after this grind, what do? We grind right back into the rejection zone. So the probability that this thing goes breaking out to the upside, could it happen? Yes. Anything can happen in these crazy markets. But what is the likelihood this pound yen is going to go ripping thousands and thousands of pips higher right now? Extremely low. What's the probability it's going to go down 1,000 plus pips? Very high. So I'm playing the higher percent. Could I lose? Yeah. But the bigger picture is down. And Randy, from that swing point low here to the current high, we're not anywhere near this 190, 188 zone. That's the 618786 off of that. That swing point low to that swing point high, there's the zone. So we're nowhere near that. We're talking about 900 to 1,000 pips just to get to the low, high 618 retracement. So even if I was absolutely wrong and we do a 618 retracement in here and then we go bouncing to blast off to the stratosphere, we still have hundreds of pips this thing could retrace just to test that. That's not what I'm thinking, that we're going to come down here and then go blasting off. But from this bigger picture and this overlapping, looks like we want to do that. We should go down and make a new low into the 170s. Amen? That is the plan long term. So you're talking a few thousand pips for us to get down there. Is that going to happen overnight? No. Next month? No. By the end of the year? Probably not. Right? Could take years for this thing to go down. Now, if the carry trade unwinds again, we had that huge move that happened very quickly. So anything's possible where this could take literally months into 2026-ish, or this thing can unravel very quickly. But any rallies, I look to sell. I'm not saying you can't scalp to the long side and make profit. Yeah, that's what the software does for you. It makes the turns and the bias, but I'm painting the picture of the Picasso. I'm expecting this monthly to cycle down in the coming months. We started the process and we just kind of engage, disengage, and we're doing it now. But this is a perfect impulsive move, three-wave correction. Now we're looking for a trend continuation to the downside via what? red hook down, money flow hooks down, green, blue hooks down. We get the PAI. The only AI you need to worry about is what AI? Price AI. That's all we need. That's the AI. And then the trend momentums will continue, and this baby will go on to make a new likely swing point low. Amen? And that's kind of where I'm looking at these different targets to the downside, breaking significant levels first, and we're looking for that to go down in the coming months, obviously. So in closing, there you have it. This is unlikely to go breaking out, so I'm willing to risk the chance of this thing going down than I'm more, unless I'm just scalping. I know I just want 10, 15, 20 pips a day and then I go home. Whatever floats your boat. I like big picture. I tend to trade on the higher time frame. My daily is my wheel, and I use the monthly, weekly when in alignment. Why is that? Y'all know the rule. When that monthly, where that little thin red line is, let me thicken that up for us, make that a thick red line. But when that happened months back, and we had that PAI hook, trend momentum cross, we had steep slope, we had angle separation, during that big carry trade unwind, what did that tell us? That weekly was going to cycle down. The weekly was going to cycle to oversold. Weekly was going to cycle to oversold. And that's exactly what it did during that period. Now we've been grinding and engage up, engage down, engage up, engage down, engage up, engage down, engage up, engage down. And now we're just grinding, but look at where we are. We got a monthly that's engaging up, about to disengage. We got a weekly overbought. So you can see why I suspect we're going to get more downside in the coming days, weeks, and months. And this baby's just been kind of chopping and grinding, but that's the plan. We're going to get a weekly cycle down like we did here, and we expect more of the same in the coming months. A weekly takes about 2 to 5 months to cycle down. So if this weekly does what we expect, and it could be one of these type that we kind of go down, we engage to disengage, engage, disengage. The more of that engage, disengage behavior, the longer it takes to make the cycle. But we could have this thing grinding lower to the end of the year, even. Because we're still got 2 to 5 months. We could possibly be in that scenario. Fair enough? All right, I believe I made my point. But the software is setting up for more downside. The technical picture is setting up for more downside. So therefore, I'm looking for more downside. That, in my humble opinion, is a much higher probability than us reversing and going blasting off. And again, when the cycle's reverse and you want to do a little scalping, by all means, just be in a position of authority. Let's continue. The big thing is the markets. Where are we going? Are we going higher? Are we going lower? What's happening? The safest bet right now is gold and silver, but I'd be careful because we're due for a pullback, even though it's going ballistic right now. And we'll get into that in a moment. But here's the current price action. And the other day, what did we talk about last week? We kept saying we break 64, we go in short. We break 65, we go long and shoot for that 40 to 60 point range. And this baby went ripping up there on ES, and you would have made your 41, almost 42 points. Talk about die and go to heaven. I know people that get a point or two on trading E-minis, and they're just like, wow, I made 2 points today. Well, the technical picture said if we break 65, we were going to make a run toward that 65.40, 65.45 area. And we got the 65.42, 41.75. Yeah, 65.41.75. Not bad. But what did I even say in our write-up? I believe it's this one. Talking 40, yeah, 40, 60 points. And there's your position of authority. What is POA? Position of authority. meaning that when it started to pop up there, I wanted to be sure I was in a position of authority because I expected when it got up there, it was likely to start reversing. So where are we now? Oh, wrong one. Where are we now? We come over here to ES and we're grinding. So what do we need to look at? You need to drill down. If you're just a day trader and we're watching this, this is looking like we're going to get a little bit more downside. And just recently, this is the area we need to watch. My timing is impeccable right now. This is right where market needs to be watched because from this recent pullback, that was Friday's big down move after popping and then ripping lower. And yesterday and today, we're just kind of grinding. Well, where did we grind up to, Mr. Tucson? Guess what? You use your 2-point tool from that high to this low. We're right in that 618786 zone. So that's part of the rejection zone. You always want to know in relation to highs and lows, where's my 618786 zone? Where is it located? So as this was grinding, that was looking pretty good initially, but if we start breaking below this swing point, which we're testing, that means we're likely going to go to a new low below the swing point low. So just as we just made 40 plus points to the upside on that pop, now if we start closing below this swing point low, then we're likely going to grind down and make a new low. Amen? Now, it doesn't mean we're going to break 6,400. We could come down with this bigger A, B, C type of correction, make a new swing point low, hold that 64 we talked about last week, and then go breaking the new highs. I still think we're headed to the 65-60 area. That was the 60 point of that move. But sometimes you get these corrections, and that's why you got to watch these zones to see what happens. And if we can hold this zone, then we start targeting 65-50, 65-60 area. Got it? If we break below it and can't hold it, then we're going to look to go down in the neighborhood of about 40 to 50 points, where we go below this 64-54 area. Let me see what that actual low is. Low was 64.59, so say 64.60. So I would expect this to go a little bit lower than that if we can hold this support zone. So doesn't mean we're definitely going lower now because we dipped the toe in there. We're talking about where do we close and how does it look. So I said the other day, if we start closing above 6,500, that's when we should go long, right? And where did we close? Right there was the daily candle close above 6,500. And what did the daily candle give us intraday, overnight, into the next morning? That 40 to 50 point run we were looking for. And then it quickly reversed and whipsawed. Got it? So this is why you're in a position of authority. So Randy, we got the same scenario again. If we hold that zone, then this is still bullish to go up here to 65.50, 65.60. If we don't hold it and we start closing below that swing point, then if the daily candle closes below that swing point, then it sets the tone. We're looking to make another low. Everybody feeling me? So back to the 15-minute. Is this thing going to hold? Maybe. Is it not? We shall see. But if we start closing below this 64.90, if you see ES close below 64.90 for the day, where the candle body closes, not the wick, and I want a daily candle, then the same would say that the likelihood going into tomorrow, Wednesday and Thursday, we're likely to see this push to a new swing point low. If this holds and we start breaking back above the magic Fibo, then to the upside, we have to take out this swing point. So you can kind of, we used to call this way back, it was compress and compact the channels, right? Same method. You can compress and compact the channels. Yeah, you can do that. And if we're likely to see if we're going to hold or not, great. Then we can compress and compact the channel. We close below this on a daily candle, we go lower. We close above this on a daily candle, we even go higher, targeting that 65.60 up there. Amen? So watch these zones, see how price reacts, then it kind of gives you a high probability outcome, whether it's going to be to the upside or to the downside. Fair enough? Well, what's the big thing? The big thing is going to be CPI on Thursday and PPI tomorrow. So these are going to be interesting. Normally, everybody knows they normally have CPI first, then PPI second, then followed by retail sales. That's like the norm. CPI first, PPI second, retail sales all the same week, right? That's typical motion. Well, this time they're inverting it. They're doing PPI first, which is tomorrow. So something's fishy about this. Something's a little fishy about this. So I'm not trying to say, does it mean we're going to go ripping higher? Does it mean we're going to go ripping lower? Could be either or, obviously. Well, that's a 50-50 flip. Are we going to go ripping higher or lower? Well, now we compress and compact the channels on these indexes and indices to know whether, well, it depends if these numbers come in really good or really bad. We could see the market rally or we could see the market sell off. But just as a warning, because they flip-flop these, it makes me wonder something's amiss. And then retail sales is not the next day. They push retail sales to the next week before FOMC meeting. So on the 16th, that Tuesday, we have retail sales. Remember, why is that important? Because normally we do CPI, then PPI, then retail sales the same week. Now they're doing PPI first, CPI second, and retail sales the next week, which is the day before. Let's go over here to the 17th. We'll actually do the whole week, which is the day before. So retail sales on Tuesday, and we have FOMC right there on Wednesday. So that's going to be the volatility in the market. The markets may not be real volatile up until that point. So tomorrow's PPI, then Thursday's CPI, that can kind of set the tone to what they may do here. Are they going to cut? Are they not going to cut? We shall see. We have a tool that we look at, and it's not silver. We do have a tool that we look at, and that is DGS2, which is the 2-year maturity rate. And then you add to that with the plus sign, this Fed fund rate. So you do that and click that in there. And then you toggle over here to make sure you're on regular, not a percent. And this is what this picture, the Magic Fibo is on here just because I like it, but you don't have to have it. But notice, we're starting to push a little lower, Randy. We're taking out that swing point. We're testing the prior low. So the only way the Fed is going to cut rates, they have room now. See where our Fed fund rate is up here at 4.33. What is that? 4.5, 4.25, the middle, 4.33. So we have room in which they could cut 25 basis points, should be easy. Maybe even could potentially be cutting it a little close. If we cut 50 basis points, that'd put us somewhere around that 3.8-ish level. But to cut 25 basis points, that'd put us somewhere about where this green bar is. So if this continues to push lower in the next week and not go ripping higher, then I think they are going to cut rates. Well, the markets, if you're interested to know, has 3 rate cuts scheduled or believed to happen in 25, the rest of this year. 3 rate cuts. Then they believe we're going to cut rates 3 times in 2026. All right? That's what the plan is. So imagine if our CPI, PPI numbers are saying a different story and it puts a nix on that, where we're not going to be cutting rates 3 times, then the market's certainly going to sell off on that news, just desperately looking for rate cuts. Or we get some really hot numbers and the number looks and says, well, man, based on that, we definitely should be cutting rates. So the market could go exploding higher on that with the expectation, well, after that data release, we might do 4 rate cuts this year. They start contemplating, ooh, rate cuts, rate hikes, what are we doing? So they're into rate cuts, 3 in 25, 3 in 26. But remember what Powell said a few years back. Didn't manifest, did it? Not even close. So keep an eye on this. For those of you that may not know what this DGS2 is, the 2-year maturity rate and the Fed fund rate. Why is it important? Because the Fed does not just dictate policy. They follow this rate. So you go out to a weekly, and we can see whenever the Fed fund rate follows the blue line starts racing off, the Fed has to raise rates. That was going into the dot-com bubble burst. And then we see what? Coming out of that, blue rate kept falling. So the Fed, that was the dot-com bubble burst, went into the financial crisis, but they had a lower rate. Then as we started climbing back up, blue rate ran off. Fed had to raise rates. Then we went into the 2007 financial crisis. And what happened? The blue line started dropping. The Fed had to chase it down. Then we stayed in that 0% low interest rate policy for several years. Going into COVID, we started the blue line rallying off. The Fed had to raise rates, and I got these little bars in the way. Let me see if I can remove those. Get that out of the way, and let me get this one. So you can see they started to raise rates into COVID, and then what happened? Blue line started to crater, and they had to cut rates again. And then why? Notice the line of this run. This last parabolic run of the blue 2-year maturity rate went parabolic. So what did our Fed have to do? 0.75, 0.75, 0.75, the fastest in the history that they've raised rates back to back to back to back, because that blue line was just ripping higher. These were a little bit more stair-stepped. That one just went straight up. So when they talk about the Fed's going to cut rates, raise rates, look at this graph. And whenever, and we'll go back to the daily, and right now I'm in agreement because the chart is in agreement. Remember last time we talked about this? And the blue line was kind of pushing up near the last Fed meeting. And I said the likelihood they're going to cut rates, even though everybody wants it and been talking about it and begging for it, the likelihood they're going to cut rates that previous time was very low, because this was near that line. What they don't want to do is cut rates and the blue line starts ripping higher, and then all of a sudden they look like a bunch of idiots, and they say, well, not only we shouldn't have cut rates, but now we got to raise rates. And it kind of scared him when it dipped here and then dipped there, and it went above the Fed rate a couple of times. He was sweating bullets. So now we are breaking down. We're at a support zone. So what does that tell us? The recent low to high, we're likely going to see this push toward 3.3, 3.2, just based on, you said, well, Gary, does that Fibonacci extension retracements work on futures rates and stuff? Yeah, pretty much. Works on everything. So I think they are going to cut rates next week. If this thing continues to push, especially if we start taking this low out, they might even consider 50 basis points. So what if we take 50 basis points off of here? That would put us somewhere around that 3.8 as you blend it together. That would be what, 3.75 to 4.0. So around that 3.8 range. So ladies and gentlemen, let me put another little line in here. That would be somewhere around that 3.8, give or take, somewhere in that zone, right? Right up in there. So the reason I'm even bringing that up, if these continue to drop and push even a little bit lower into next week, the probability they're going to cut rates is extremely high. Extremely high. What if this thing just went reversing back up by next week and it's anywhere near this zone up here again? Then he'll probably not cut them again. Believe it or not. Ripley's, believe it or not. So right now we're on target for a rate cut. If this blue line continues to decline instead of ripping higher and maybe not cutting rate, what if this thing continues to break down towards this 3.3 or 3.25 by next week? What if we're down in here? Then there's a chance he might even go 50 basis points. So that gives us a little wiggle room there. So we shall see. One thing's for certain, if this thing starts bouncing between now and next week, and we're back up near anywhere near that 3.8, then there's no way he's going to cut 50 basis points. Because he'd be freaking out knowing that he's cutting the rate right at the maturity rate level. He wants to chase it down, but he wants to see it keep going down to chase it down. Got it? So that's just a little lesson learned. I do think at some point inflation is sticky and all this money they're printing and all that's still going on. That's why gold is going so much higher ballistically right now. Gold and silver have been on a tear, and be careful because it's time for a pullback after that parabolic move. But that's where the risk off is. A lot of these high risk investments, stocks, maybe even some crypto, they're going into gold. Long-term investment, I think gold's going to 4,000 and 5,000. I think it was Goldman Sachs said it. I agree. I've been saying it for a long time. That would go from 1,900 down to 1,000, then to 3,000, and my next target is up there at 5,000. Well, after that parabolic move, we'll get over gold in a minute, but it's likely to start pushing lower and correcting. So long term, no question, buy gold bars and gold coins, whatever, that's fine. No question. That's a good investment. Even at these high prices, when it gets to 5,000, 3,600 is not terrible. But be prepared, this volatility of that parabolic move, we're likely to get a big push lower too. I'll go over that in just a second, like I said, but watch this line, Randy. We continue to break down. They might even cut 50 basis points. What if they do that? The market should go ripping, right? The market should take that with great news and go ripping higher. What if this thing reverses and starts ripping higher? Man, if he doesn't cut rates this next time, markets are going to tank. They're just not going to take that anymore. They're already built in 3 rate cuts, and we're getting toward the end of that schedule. Let's see, schedule. We have what's left? September meeting, October, and December. Well, what does that tell you, Mr. Tucson? They expect 3 rate cuts this year. That means it would have to be here, have to be there, and have to be there. So if he doesn't cut rates, the markets are going to not like it, because then their idea of 3 rate cuts by the end of this year is blown out of the water, because we only got 3 left to go. Amen? This food for thought on that. So be careful in the markets. I'm always perma conservative in market action. That's why I force price to prove itself. But looking at ES, do we break out or do we break down? We probably won't go ripping higher or breaking down much lower until all eyes are wait and see. But in the interim, I would watch the zone. So for those trading ES, watch this swing point high. Watch this support zone here that we've tested a few times now. We start breaking below it. So we close below the daily candle below 64.90. Then it's likely we're going to make a new swing point low. That's the daily candle body, not a 15-minute daily candle body. Now, what if we start closing above this 65.20? Then we're likely going to 65.60. And we should see either long of it, short of it. And what do? Those numbers tomorrow and Thursday should give us insight to what the Fed is thinking, first off. But this is my way of thinking. If this continues to push lower, no question he's going to cut rates. I mentioned it way back during this little initial push that he would cut rates if we started breaking that swing point low. So what happened when we started breaking that swing point low? Boom, he cut rates. So now we have this swing point low. And what happens? Is he going to cut rates? Yeah. This starts breaking down. He's going to cut rates and start following. And depends how much this goes down. Do we do 50 basis points or do we do 0.25? We shall see. But the door is ajar, as my good friend used to say. The door is ajar for him to do 50 basis points should we start breaking down toward 3.3, 3.25. Because when we broke that swing point, started breaking down, they did 50 basis points here, which I think was more of a political thing going into that election. But you get the point. I digress. But we start breaking down in this zone, we have a chance the door is ajar to do 50 basis points. And what if that were to happen? What if, William Bruce, they cut 50 basis points, our market would be enough to stimulate for as ES? I think we're going to go reach my target of 6,600 up there. Well, we've been talking about that forever and a day, reaching 6,600. And I think if we do 50 basis points, because it surprises, that should give us enough oomph for this baby to start ripping, not only to 65.50, 65.60, but open the door to that 6,600. If they somehow don't cut rates, not only should we get a new swing point low, but that should put a sour mode in the thing where we start closing below 6,400. Then the door's ajar for our 63.50, 63, maybe 6,300. So we have some big upside and some big downside potential based on what the Fed's going to do. And in the interim, I think all eyes are focused on Wednesday and Thursday, followed by next week's, and this is the following week, but this week's Wednesday, Thursday, which is again PPI, which is first. That's a warning sign, something's up. Then CPI, but by Thursday's class, we'll know what these numbers are, and we'll know what these numbers are, and we'll kind of be able to decipher based on that what we think the Fed's going to do. You go back and look at this chart, see what it's doing. Is this baby starting to rip higher before next week's meeting, or is it breaking down lower? And the lower we break down, so this is the swing point like that one, that opened the door to do 50 basis cut. We start breaking below this swing point, which we're testing, opens the door to 50 basis points. And if they do that, then the market should go ripping on that. Got it? That's kind of the plan. Rinse and repeat. So finish up. ES kind of did that one very well. 15-minute. We got a swing point high around that 65.20 area. Let me zoom in and get those exact levels. Yep, right around that 65.20 area. So we start closing above 65.25, give it that little extra little wick. We close above 65.25, game on to go up to 65.50, 65.60. And if we do 50 basis points next week, that should push us to 6,600. NASDAQ, kind of the same. We're kind of testing. This looks a little bit more bullish, but it's still struggling. Last 3 days, we rallied in to try to break above that 786 zone. Failed. Yesterday we tried. We closed below. Today we tried. We're still hadn't closed yet, but we're struggling in this zone. So be careful with that one as well. You go to your 15-minute, and it's a perfect rinse and repeat. You bring this back out. Here's Friday's decline. And we grind it a little bit higher. We're still at lower highs, but we're watching this same zone, and that is where we started to stair step, and we got this little support zone right here where we tested, then went up, came back and kind of retested, which we're testing now, to this zone there. So from 23,750 down to about 23,700 is a zone we're testing now. If we start closing below that, then it opens the door for us to potentially break down to a new swing point low. If we go breaking above this battle zone up here where we tested a few times, then it opens the door for us to make a move toward 24,000. Long of it, 24,000. Short of it, maybe we come back down toward that 23.5. In the interim, compress and compact the channel. So as you kind of zoom that in, stretch that out a little bit, we can see we're stuck in this zone. So if we break it, we go long. If we break to the downside, we go short. Amen? And that's what these color-coded highlights are, which represents that bigger move from the recent low to high and the stair step. We've been grinding, making new highs, higher lows. That's why these levels are very important for us to continue to go higher, or do we break down to make a bigger correction? So be careful today, because I don't think the markets are going to do too much of anything but a lot of chopping, because of all eyes being on the calendar of PPI tomorrow, CPI on Thursday, and then certainly based on those numbers, and then the following week, FOMC, retail sales on Tuesday, FOMC on Wednesday. But this will be the key for, do we cut rates? If so, could we potentially do 50 basis points? And the only way I see that is if this starts breaking down, then it's potential, the door is ajar to do 50 basis points. Otherwise, Randy, if we just kind of chop and just hang out in this zone, then I think 25 basis points is certainly logical. But I like the fact that if this breaks down, they could potentially open the door to 50 basis points, because if they do, then my market outlook is going to be for the markets to go ripping higher. Amen? All righty. Let's continue. So any questions on ES? No, I didn't want to do that. I changed my, I have my ES here. I have my NASDAQ there. So if I have to, I'll go back and do DGS too. I didn't mean to copy it on there, but anyway. So if I had to guess, we're probably going to chop more so than go breaking down or breaking out until we get a taste of something tomorrow. Good, bad, or indifferent, that should be a catalyst to force this to start to do something. In the interim, focus more on the daily chart, not the 15-minute. And look at this indecision. Ran up, went down, kind of stuck in the middle. And that's based on our levels to watch the break or levels to watch the break the bottom. And we're kind of stuck. And I think that's because all eyes are on the calendar. So should we get very disappointing news where CPI, PPI are, ripping higher and inflation is back, then I could see the market selling off. If they come in well expected and under, then it should be, yep, rates are held lower. Now we can cut rates, opening the door. But that DGS2 chart certainly has the door wide open to cut rates at least 25 basis points. If it continues to break down like we discussed, then 50 basis points could be on the mark. And if that happens, look for this to go ripping. Next targets to the upside again are 65.50, 65.60, 6600. And then NASDAQ, we got to break out of this little compressed and compact channel the same. But if we start closing above this on a candle body, not a wick, the candle body above that 23,850, then we're going to target 24 initially, then 24.2, 24.3. And what if, William Bruce, we get a 50 basis point cut next week? Then we're not only targeting 24.2, probably have enough oomph to get us toward 24.3. Okay? All right. Now, if the reverse happens and they don't cut rates because they got 3 cuts in 25 and we only got 3 more meeting, then this thing could sell off and even start breaking to a new low off of the support zone. So we've been stuck in what? Support and resistance for weeks now. And we've been testing in the zone. It looks like we want to go breaking out because we're testing up here, but it looked like we wanted to go breaking down the last several weeks as well, and to no avail. So that's what I'm saying. Be careful. Wait for a close above to go long, or if we can get a close below, then the door is ajar to come down considerably lower. And what would that take? The Fed not cutting rates. That could do it. That could get the market so disappointed and just boom, big sell-off. What about IWM and the Russell? Russell 2 is still struggling. It looks a little bit more bullish, like maybe it wants to go visit. We kind of talked about reaching 2409, maybe 2418. We dipped into it. Now we're struggling again. So again, I think all eyes are on the releases. If they come out where the Fed does 50 basis points, then we'll start targeting 24.30, 24.50. If we get big disappointment, then this thing can start certainly tanking, which is certainly a possibility, but be careful. Any direction you trade, be in that POA. What's POA? Position of authority. Just like we said last week, into Thursday's class, if we can close on a daily candle above 65, you want to go long, shoot for like 40 pips or so. 40, 60 points. And POA is position of authority. And we know what that means. That means you don't allow trading futures to go up 40 points and do nothing about it. Take profits. Be in a position of authority so that if it does whipsaw and come back down, you'll get stopped out for more profit, but lock in initial profit. That's what we call position of authority. Amen? All righty, let's continue. What's after the Russell? It too, again's on thin ice. Do we go breaking out? Do we go breaking down? Same thing. This one looks like it wants to go on and make a new low. Look at the difference between Friday's high and that whipsaw back down. We're already taking out the swing point, and maybe we're going to retest it to fail, but that means we believe, or we're probably going to go on and make a new swing point low on RTY at the moment. So IWM, the way most people trade this, we're holding the 15-minute Magic Fibo. That's important if we're going to continue. We still have more Magic Fibos on here. Hour is down in the support zone. We have the 4 hour way lower. So could we go visiting, start breaking the 15, which we're testing. Then we look at the 30, a little bit lower. Then we look at the 1 hour, a little bit lower. So the key is to have the Magic Fibo on all your charts. That is a part of the MPA PE5 version 5.0 software. You get that with it. It's a magical level. And could we get this pullback? Man, they don't cut rates. I think we're going to come back and visit on a daily chart. We have a very good chance we'll come back all the way back to 218, cut this 236 and a half to 218, not half of the big number, but from 18 to 36, let's split that in half, come down, or we can start breaking out toward that 24 and change. So IWM would be that 240. Let me enlarge that so you can see. I know there's nothing but a bunch of Fibo lines on here, but we have some major resistance up here. We tried, we failed, we tried, we failed, we tried, we failed. So that's warranting what? A test of this 618, 786 zone. We're grinding down toward that level. It'd be a shame, EMEA, if we don't come down and test it before potentially bouncing. So maybe we get a little mixed numbers on PPI, CPI, and then Fed rate next week. We go blasting off, or we get a big disappointment and we go tanking. But I'd be very careful with this. A lot of whipsaw chopping, be in a position of authority. And yes, if we start taking out this new swing point low, we should come down to this 234 down to, say 234 area, which is a couple of points. All right. If not, we start closing above 238, kind of sets the tone. We're going to go visiting 240, 244 area, 240, 241 first. Global liquidity getting spanked. Thought we were breaking out. Emil, this looked good. Right? We started to break above the 618. That closed there made it look like we were going. But we got spanked today. So keep an eye on that. There is a regime change here. So is that going to have this thing go down, or is this thing going to go blasting off? But in order for us to go all-time highs and to reach those targets, for those of you keeping score at home, we believe the ES is going to top out somewhere between 6,600 area, maybe 6,800. We're not there yet, so we'll see if we get disappointment first to get up there. But I still think we're going to get a blow off top by year end. Some of the new analysts out there have made a statement that the Dow is going to 99 Dow, that the ES, S&P 500 is going to 9,900. Huh. Well, that is a huge move to get to 9,900 over the next couple of years. I don't see that in the technical picture, but if that thing goes ballistic, and all I know is we get to 9,900, you're talking about I'm going to short the daylights out of that thing. I can't imagine it goes there. I made a statement before we break 7, we're going to break 4. And we almost got that when we were up here at 6-ish, and we came all the way down to the 4s. We just didn't break it during that big scare, the tariff talk. So I could have been a little shy here and we do go ripping higher, maybe. But I'm not convinced until I see price prove it. So before we break 7, we're going to break 4. I still hold that on the chart because I made the statement. I'll live by what I say, and until the technical picture changes. NASDAQ, again, I think is going to go up toward 25, 26,000. So I don't think this is the end. Even if we get some big pullback, that'd be awesome. We get some sort of pullback first, then we get up. So yeah, the bigger the dip, the more I like it, because I still have my target up here that we're going to reach it. Well, if the I keep saying down, if the ES goes up to 9,900, where in the hell is where's this going to go? 57,000, 60,000? Where would that go? So it's interesting how they pushed that out there and said 9,900 by the next couple of years, the Dow is going to go running to. Maybe. I'll believe it when I see it. We'll take it one swing point at a time and one target at a time. But I would not be on the technical picture. I don't see it. So until I do, I would not be drinking that Kool-Aid that we're going to 9,900 by the next couple of years. I'll believe it when I see it. Amen? All righty. So again, watch the Nikkei. If this baby can't go breaking out, then I don't think our market is going to go breaking out. But if it does, and we start ripping toward that 48 to 52, so like 50,000 range, then that should put our NASDAQ at that 25, 26,000. We do that. ES should be at least 6,600, between 6,600 and 7,000. And I'm watching this closely, not because it makes a difference, because of global liquidity. Amen. If that evaporates, no way can I see the markets going ripping up right now. If this does, then by all means, we got a very good chance. But look at how this was rejected, Akeem Olajuwon style. It looked like we were breaking out, but got spanked. So let's see how this closes. And that'll kind of give you insight. What's next? Black gold Texas tea. Watch this little bit of a rally. I still think we're going down. All roads based on a technical picture, and we were pretty accurate about that little 3-wave correction and a push lower. So I think we're going to fizzle manizzle here, make another lower high, lower low, and we continue to break down. Once we take out 60, say hello to 54, 52, and probably going to dip into the 50s, $50 or lower. So that is the plan. Any rally on black gold Texas tea should be sold. Don't buy this for this thing to go breaking out. I think it's going to break down first, but once it breaks down, it's salivate country for a big bounce. Why? They can't survive on oil prices below 60 bucks. Can't survive on that for long periods. So as we dip down to 50 or lower, that is screaming a big, whether it's the Middle East going into some kind of war, something going to happen. And we can get down to 50 or lower, look out. This thing's going to pop. I mean, that's what I'm hoping. In the interim, any rally should be sold, in my humble opinion. Remember, this class is for education, information, and to be a whole lot of fun, but it's not a specific buy, sell, or hold recommendation. I tell you what I'm doing based on the technical analysis and based on the high risk, high reward, high probability trade. I should say low risk, high reward, high probability trades. So watch that. And we expect this should break down further down, not go breaking out. Any rallies I'm looking to sell, like we've been talking about ever since this one, that one, this one, they continue stair-stepping lower, making lower highs, lower lows. I know I bored you to death with some of this, but this goes way back to May of 23 when we had the big blow off top. We came back down. And ever since then, we've been overlapping, chopping that high, this low, lower high, lower, higher low, lower high, lower low, lower high. And we went through a series of lower highs. And based on this bounce, where it's supposed to have been very impulsive looking, but it turned out we got these overlapping, 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 overlapping lower highs. So I made a statement way back then during this whole period. We need a new swing point low because of all this price action, Randy, kind of like the pound yen. We need a new swing point low because of all that. So since then, we got the swing point low. But just like this, where we did overlapping, we got lower highs. What have we done since we got a new swing point low? I'll zoom that in. And it looks like almost a duplicate exact of the following. We got the bounce, looked like it was going to break out. And then we got what? Lower highs, lower highs, lower highs, overlapping, chopping action. So just like I said, back then, we needed a new swing point low below that May of 23 low, which is this 60, basically this 63 target, that big line there, battle zone, that we broke below, we broke above, we broke below, we're retesting. But the bias is we're going down because of all this overlapping, chopping, lower high scenario, which we did for months on the prior one, and we broke to a new low. This one is screaming the same thing. Got it? So once we start breaking the new low, say hello to your 54, 52, 50 area. And that's where I definitely think we're headed. Then salivate country, Mia, when we're down here for this thing to rebound. Because all these oil manufacturers, etc., drills need oil above 60. And I would expect a quick whipsaw type of action if we can get down below 50. And what I would not expect, Dan and others, is when we get below 50, we're going to sit down there for days, weeks, and months. I don't see it. I see the whip type of move. Get out of there once we get down there. It might even be an intraday dip of a candle and a big reversal. Okay? All right, any questions on black gold, Texas tea, the Beverly Hillbillies? Any rally should be sold and look for more downside. Once we take out 60, that sets the tone for what? Recent low, recent high. There's my 618. There's my 786. So we're definitely going to go test that 60. But once we break it, the doors will go where? Basically 52, 49. High probability. That's why I'm saying dip below 50. And I'm very interested to buy that dip. In the interim, sell rallies. Gold. It's parabolic, my friends. This thing's going to the moon. Risky assets are piling into gold. They don't have confidence in the markets. They don't have confidence in these high-risk assets. And there's so much money out there, trillions and trillions of dollars. This thing has gone parabolic. Be careful. Because, Randy, I think I'm boring some of you guys with the same song and dance, but that was a beautiful three-wave correction. And since we got that correction, we got the overlapping, chopping, grinding. Clearly, this was a squeeze in here, and we popped. But it still looks like this is an A, expanded flat B. We come back down in C. So be extremely careful. Yes, I'm a gold bull. exceptional. I've been talking about it forever. And that 3,000 plus target. Look, we're pushing toward 3,700, just shy, and maybe we go and touch that 3,700, maybe 3,750. But this is the big resistance zone. I'm looking for this to give us a correction at some point. Then we go a little bit higher, then we do it. But this overlapping chopping action into that three-wave correction, this part is not conducive to a parabolic move that's just going to go forever. It's conducive to another big whipsaw back down. So I kind of warned you in this area we'd go down. We didn't get it. We actually broke out the wrong way. Now I would just say be extremely careful. If you're buying gold long term, great. You're in good hands. I say congratulations. Especially if you have physical gold bars and coins on hand, that is a fantastic investment. It'll hedge inflation. It'll do a lot of things right now. Gold's been around for what, 5,000 years? It's trusted, it's proven. But if you're just day trading this, expecting I'm going to keep buying long and buy a bunch of call options on GLD and some of these, because this thing's going ripping higher, it's parabolic. We're already pushing extensions up here. It is screaming, and especially the previous price action going into that, it is screaming a spank back down. So be extremely careful if you're short-term trading this. I was looking for this to start breaking down first, and it did the opposite because sometimes it'll do that. But even with that, still got all the prior foundation of that parabolic move. So it is screaming a correction. And what would the correction look like? Minimum from the recent low up to the high. Let's say we push it to 3,700. Nice roundabout number. Then we would look at least for a 3,450. Pretty good, a few $100. Come back down and test that 618, 786 zone. But if it is this bigger picture, and that's the A, and all that is a expanded flat B, ending diagonal type of B, and we're going to get that C back down to come into the area of wave A, that would put us probably at the Magic Fibo, 3,200, somewhere around 3,200. That could be $500 decline. I warned you about it over here. We didn't quite reach the Magic Fibo, but it was several $100 from that 3,500 down to a low of 3,100. Good $400+ correction. Well, it's even screaming it more so now. Amen? So be careful. I would not, unless I'm buying this, to be holding it. Go to Costco and buy silver bars at 36. Great. If you're holding it till we get to 5,000, then it's a good investment. If you're short-term trading that, expecting this thing just to go ripping, by daily calls and look for this thing to keep ripping higher, I think you'll be rudely awakened when this thing starts plummeting. Amen? I'm not talking about, it's going to 1,000 or anything again. No. But I really want to see it come back and visit my Magic Fibo. And we haven't done that in quite some time. So it is overdue. Look, we came close, still no cigar. We got to go way back till we finally started testing it in 23. Maybe we touched it right there in early 24. But we haven't touched it since, so it's overdue. Amen? So be careful. Short term, I would look for this thing to start giving us a pullback after that parabolic rip. And even with all this price action going into that rip, screaming another rebreak test, even if it just comes down here to retest that prior breakout level before we go bouncing. But likely we'll probably see it come back down toward these lows and retest that Magic Fibo. So be awfully careful in the short term. Long term, by all means, keep buying and adding, buying and adding, buying up here. We do get the correction I'm looking for. Then we could buy some more at a lower price. But is this thing going to 5,000? In my humble opinion, no question. The one you really should be visiting is silver. Silver is ripping higher, but it too is going to get a pullback. Definitely going to get a pullback. And we're looking for, this is a long-term trade we had this baby running. We went up and touched our target. I moved this higher because I do think it's ultimately going higher, so I could just have this thing continue to run. But this was the trade, Emil, we talked about years ago when we had that run and we came back and held my 618 zone way back when. We talked about buying this and shooting for what? 35, 41. Bingo. And now what? This too is parabolic, so we need some sort of pullback. And then the pullback should be met by buying the dip because we're going much higher. Where's this going? We're going $60, we're going to $70. And that is, I got to compress this thing way down here to get way up there. So theoretically, I could move this thing all the way up here into the $60+ range, which is an awfully long way away. But that's where we're headed, but we need some sort of correction. And it too, the big picture, this is like a big 5 wave up. We need like a new, on a monthly scale, this is a monthly chart. So we have this impulsive move higher, 1, 2, 3, 4, 5. Then we got this 3-wave correction and a 618 retracement. Perfect move. And then this looks like another 1, 2, 3, 4, 5. And typically 5 waves in commodities are the ones that really stretch. And that's the definition of stretching based on where we are. So this is why I can't imagine silver. Yeah, I do think we're going up here, but are we going to go from here straight up there? No, we need some sort of correction. And this thing could take some time. Just like that big move, it took us a while to do that correction to start ripping higher. Now we need a bigger style correction to warrant the next push. But this one is so underperforming. Why is it underperforming? And this has been running. So this is a trade we put on years ago, and it's still running. So looking at the charting platform, and we look at this bigger picture, is, I can do it probably from a weekly. I'll bring this back down over here. And this is what we're looking at. All-time highs. We're getting into some interesting areas. We still got to break some more these resistance zones. We got one up here at 42, one at 48, and we're testing up here now. So yeah, we still got a little ways to go. But are we going to get to 60, 70? In my humble opinion, absolutely. So it is underperforming. Gold's broken out. You look at gold at the same time frame, we have long since broke out. That's the 2011 top. And then we got the correction. That's the same on silver. 2011 top. We bottomed a little bit later in COVID where gold bottomed over in this direction, but we actually got another swing point low during COVID down here. But we haven't even broken out new highs since 2011 highs, all-time highs. See it? Gold, we broke that out a long time ago. Over here, we started to test higher and test, and then finally went parabolic. Look at that parabolic move, breaking out from that 2011 high. And remember my statement back then when we reached this 1900, we were going to go back to 1,000 before we reached 3,000. It took a while from 11 down to about 15 to get there, but it did. It made it into the 1,000 territory and then went where? 3,000 and above, up to 3,700, 3,670. Not too shabby. Well, that parabolic move needs another pullback as well. So that's why I'm warning you. Long term, where's gold going? 5,000. No ifs, no buts, no ands. In my humble opinion, no exceptions. We're going to grind up there. But to think that we're just going to go straight from 36 whatever hundred right now, 3640, all the way to 5,000 nonstop, and it's just going to continue with that parabolic move, we need that correction. Just a warning, we'll get the correction. Keep adding long term, fine. Short term, wait for the buy of the dip, and then start doing it again. Amen? All righty, but this is why you should keep your eye on silver. Look at this thing. If it starts to reach these extensions, not only is this 60-70 target, but look where the extensions are up here. 2618 up at above $100. Wow. That's a long way. That's a double from this box to get up there. And look where gold is. 2618 pushing toward the 3618. Right? We're up in between the two. Silver. We're not even at new highs, much less pushing 2618, pushing toward 3618. So you can see why silver has a major underperforming and has the hugest potential of these commodity metals. Big time. Way higher. Any questions? Definitely going to 60-70. I want to see SLV. I'm in it to win it. I'm still holding, but I'm also looking to fill some more and add to the position upon a pullback. And how much do we pull back? Let's go back to the daily. We're due parabolically. That move was great. I love it. Been looking for it. You see in that big term chart, we've been looking for that target for a very long time. Now we're reaching the extensions. So we need perhaps back at least the 35 area, a retest before we break out. Or is this similar to gold? Impulsive move, chopping, overlapping, and we need to come back down toward this level and maybe even come visit the Magic Fibo before we do. Any me, if that ever happens, set an alert. That's what they're for. I don't have to watch the chart every day. Hey, gold ever, SLV ever rings at $33 or lower, I want to back the truck up. Right now we're at around 32.40, 32 is the Magic Fibo. But we come down that Magic Fibo anywhere below $33. That's that swing point low. See it? Right there. Swing point low. We get anywhere at 33 or lower. Man, all I want to do is buy because we're talking a double minimum from that point. Is this going 60 to 70? Yes. So we get the 33 or lower. That's a double plus. And will that happen? In my humble opinion, absolutely. Absolutely that's happening. Do we get the correction? Be careful. Again, if you're loading up on some SLV call options and a little something and some of the more riskier ones, I'd be careful in the short term because I do think we're long overdue for a bigger correction. Amen? And if we can get it, minimum 35, back in that 35 area, retest that, we don't hold that, then the door's ajar to come down as 35 to 34.60 area, which is a support zone. We break that, then the door is certainly ajar to come down to 32.31, which would be the Magic Fibo. So we do have some support zones. We got this one from that recent low to high. We have this zone that 35, 34.60, 35 area. And if we break that one, we'll go to this one. We break that, then we'll come down here. And that's where the Magic Fibo is residing. Love to see it. So anything 33 and lower, I'm all over adding to that position, shooting for 60. So I plan on, in this scenario over here, come over to our Ninja Trader. Let me go to Ninja Trader. TSLL kind of chopping and a grinding, but we expect this to go much higher in the days and weeks and months to come when Tesla breaks out. But you can do the same on these other targets. We can put our SLV in here. Let me see, do I have one open? No, I don't. Also, just to mention, we do have these Fibonacci retracement extension tools. When you go in here under drawing tools, there's MPA Fibonacci retracement extension. So all these things I'm running on TradeStation, TradingView, Ninja Trader, MetaTrader, all these are in here that we use. The same extension, retracement extension zones are listed in there for your ease of use. And you just simply take them on a chart. I'm looking for these to go much higher. Apple, etc. I'm looking for this to potentially give us a big down correction. We got the impulsive move down, all this overlapping chopping action. We're stuck in that same zone. We're likely going to get a push lower. We'll see how that plays out. If not, we can start breaking that zone. Then we can start targeting 273, 285. But if we don't and we start breaking back down, then we can get an equal and opposite measure. And there's a potential on this chart that move lower, all this chopping, overlapping action, grinding into the zone and failing sets the tone. We could get an equal push down about 140. Apple down to 140, you insane? We shall see. See where the markets take us, but we'll see how that plays out. I digress, but all the tools are here for you. And we can, if I can add something new, and go in here and select SLV, put a chart on SLV, and it looks pretty good. Let's do, what is this, a daily, load 365, put some numbers in there. Oh, that's a 1 minute, that's why, sorry. I thought I was on a daily. Now we're on a daily. That might make it crash when I told it to give me 365 1-minute days. Oh, ouch. Sorry about that. Well, anyway, if I can't pull this up right now, SLV daily. There we go, 365. Apply. Let's see if that'll give us something while it's updating. And we'll come back to that tomorrow. But all the tools are in here. CONL, same thing. Looking for this to go higher. And as Bitcoin breaks out, this is going to break out. And we were huge on that CONL back when it was below 9, went up to 70 plus. Now we're looking for a beautiful 618 retracement email, and we're looking for a weekly cycle back up in the coming months as we go toward the end of the year. This thing should probably go ripping back into the maybe 870 to 90 range is kind of the plan. But anyway, let's go back over to the charting platform and be careful. Correction first, but we're going to 60-70. Finish up with Bitcoin. Bitcoin's being rejected yet again. Are we going to get new swing point low? It looks like it wants to break out, but we could get that correction. If we do, that would be a good thing in the long term because once it bounces, it's got to go that much further. But we've been talking about the Bitcoin arena that we're targeting 150 to 170. That was the target that we talked about in 2022 when Bitcoin was below 20,000. I made a bold statement. This is a crime, opportunity of a lifetime to buy Bitcoin below 20,000 because we're going where? 150,000. And so far we got to the 120s, and I don't think we're over yet. We still got this September, October is the 12 to 18 months post halving. Just as a quick review for those of you that may not be into crypto or know much about it, you go back to this chart. Bitcoin goes through a period called halving every 4 years, 12, 16, 20, most recently 24. The next one will be in 28. And what have we learned? Every 4 years you get a halving, and then post halving you go on a 12 to 18 month run. Crypto winter low, 12 to 18 month run post halving. Crypto winter low, back in the next halving, 12 to 18 month run. So from that 22,000, below 20,000 low here, we're on that 12 to 18 month run. And where are we heading? Into this zone right here with the blue lines. By September, October is that 12 to 18 month run target zone. So the latest I think we'll go is by year end. And then I don't think we're going to get the huge rejection like we always do, because now we have hedge funds and pension plans and all kind of other trillions of dollars involved, which were not the case before. We may not get the big decline into 2026 that we have in the previous years after the 12 to 18 month run. Big year plus down in a crypto winter low where Bitcoin drops 70 to 80%. Boom, boom. We may not get that this next time, but if we do, we know what to do. Just like we did here when we were below 20,000. I told you that was the ideal time to get back in. Shoot for 150. We're up at 120 and we're still chopping, but I still think we got another push coming. And I will zoom in on the daily chart now, but that's been the rinse and repeat, and it's like a 4 year cycle. We topped out on the highs in 13, 17, 21. Guess when we're going to top out in this year? 25. And then we got our crypto winter lows. Let me move this over this direction. But we got crypto winter lows in 22 and 18 and 14, right? Actually, right there, 14. And then before that in 12. So rinse and repeat, Harold. When should we bottom? 2026. And when do we buy again? 2026 into 2026, late 26. And then we hold it till late 2029, which would be the next halving in 28, out 12 to 18 months. So that should stay. But the only thing that I think might change is because of all the ETFs, the pension plans, all the things we have now we've never had before with Bitcoin. We have now. So we may not get this big post crypto winter massive pullback like we historically have seen. So I still should bottom somewhere in that 26 zone, but do we go that far down? I'm leaning toward probably not. All I can say is, Mr. Tucson and others, we get anything like that where Bitcoin gets to 50,000 or lower, you better back the truck up and then some, because that's even more of a steal of a deal when we were at 20,000 and we did it in 22. If we can get to 50,000 or lower, that, my friend, will be yet another unbelievable opportunity. But because of all IBITs and all the different ETFs, all those things, the pension plans, the big hedge funds, trillions of dollars, they can't allow that kind of volatility when you have trillions and trillions of dollars on board and like retirement accounts. So it probably will neutralize this. The good news is that we're going to $1 million. Bitcoin, hint, 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 will go to $1 million. We're only at 110,000. That's a steal of a deal now. But we may not get that massive sell-offs like we're accustomed to prior. Like in that 22, we dropped 70+%. And do we get it again? Probably not because of the change. But the good news is it's still going to a million no matter how you slice it. So rinse and repeat. Watch Ethereum. It too is probably, if Bitcoin gives us that bigger pullback, Ethereum will probably do a little bit more pullback. But so far it's holding the zone I'm watching and it's testing it. But we're probably going to get, if Bitcoin gets a new swing point, we'll probably get a new little swing point, maybe around a 4,000 range. And then we go blasting off. Technically speaking, I'm still very bullish Ethereum. And I want to see the support zone hold around that 4,000, yes. But I still think, based on the prior action, I'll go out to a weekly. And we look at the prior all-time high to low, we took out the 618,786 zone. So that's screaming we're going to 5,500, 6,000, and maybe push it towards 7,000. So these targets at 55 to 6,000 looks like it's the highest probability. So even with a little bit more pullback, warrants a bigger bounce. And ETHU was one that we used multiple times. And yes, Harold, we're pulling back a little bit more, but we did it here. Big run, pullback, big run, a little pullback, a run, kind of pullback, a run. So we could dip a little bit more, but I still think there's more upside. And you remember the conversation that when this was in the $20 range, after the splits, but when it went to the $20 range, we talked about at that point, believe me, even as Ethereum did the big pullback, I expected it would go at least back to 4,000 range to retest that zone. Since then, we broke out above that, but that we would make a run toward 160 to 200, which is the 618,786 zone, and we went from $20 to $190. That's a pretty good run. And the good news is, I don't think that's over. I think it's going to dip and rip again. So if Bitcoin, when it makes, in my humble opinion, that 150 to 170 range, that's the plan, then its plan is to get up to that 5,500 to 6,000 range for Ethereum. And when Ethereum gets to 55, 6,000 range, this baby ought to rally back to somewhere about that 280 to 300 zone, or maybe potentially higher. If we go ripping to 7,000 or more, then this thing could go ripping up near 300 plus up there. But I still think this is still a good investment. I'm up huge on these, obviously, but I'm looking for a little something extra, Mr. Toussaint, as we get that year of the end push. Bitcoin makes the run toward 150, 170. Ethereum makes a run toward that 5,500, 6,000 or higher range. And that would put my ETHU somewhere between that 2 to 250 minimum, probably as we're pushing more to that 6,000-ish range or higher. We're probably talking somewhere between 250 and 3-ish. Got it? So I'm looking to continue with this to rally even further, knowing we probably get a little bit more of a pullback before we're done, and then we go ripping higher. All right. So with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentored instructor. I do want to call one last thing out, and that is another tool we have. And I think I already placed it on this S&P that we set up the other day, talking about if we break this level, this is what we call a bracket order. So Randy, we do have this. You go to your expert advisor properties, and we can see this is called the bracket pending orders. So it brackets a high and it brackets a low of your choice. You enter it down here. So if we break that 65.20, it'll automatically go long. If it breaks down and breaks below 6,400, it'll automatically go short. Look for this to go down. But this is a bracket order trade management system. And you click ready to trade. And when it's in the ready to trade mode, it posts it. And there's your line. So when we break it, it'll go long, or break it, it'll go short. So it's just another tool in the toolbox. And obviously, once it enters a trade, it puts in your take profit, stop loss, etc., and does it. So I'm just going to turn that back off for now because I'm still doing some chart updates and I got to do some things first. But this is another trade management system in which we can use. It's called a bracket order. So when you look at the software as a whole, there are tons of tools in here that most people aren't aware. We got a bracket pending order. There's a breakout pending order. This one's a little bit different, where you set what candle you want to break out. So like the London Forex session, London session, the first candle hour, you get a high and a low. Or in stock trading, I could put it on the first candle breakout, like the first hour, if I'm trading a particular stock. And I could say, okay, when the 9 a.m. or whatever time I'm interested in, it'll put pending orders above the high and above the low, and it pops it in automatically. So you dictate what candle. So for London session, the first hour of London, I typically set a candle, then it'll pop the high of that session, the low of that session, and put a pending long, pending short. And if it breaks the high of that candle after the first hour, it'll enter a long trade, cancel the short trade, or it breaks the low of that session, that candle that it pops, where this one is a set number. I put the number in here and it's not fixed per that particular hour candle, for example. The bracket permanent, where until it breaks 65.20 or 6,400, it'll stay in that zone. Or we get the, obviously, the scenario with the breakout pending. That's where you dictate and put on a specific hour candle. And at the hour candle you choose, it will pop in a high and a low of that candle, and then it sets in some pending orders to go long or short. So a lot of tools in here, and in a traditional pending order. I mostly use the instant order, whether I'm just getting in and placing a trade to get in, or I set it in advance, like we did with the euro and the pound, where they did a cycle. And we talked about this weeks ago in these live classes, that we said when this daily got oversold and reversed, I want to set this in advance, days in advance, in ready to trade mode. And when it finally triggered higher, entered the trade for you. And this was a new entry we just did here, expecting this to grind in the coming days and weeks. But I'm in a position of authority, so I'm not really worried about it. And I'm up since the 95 low. We're up thousands of pips. But we do have a lot of tools in the toolbox, including the Magic Fibo, which you see it on the different charts. Magic Fibo on this daily chart, you can see it pops in. Then we have it in NinjaTrader, Magic Fibo. You can see on TSLL, that's the Magic Fibo there. So all that's included for your viewing pleasure. So with that, take care. God bless you. Love and appreciate you. Remember, tomorrow is the big day. What does the, where's my, there it is, this one. Tomorrow is the big day with FOMC. Next week, we got CPI, PPI first, then CPI. So be careful. This could set the markets either tearing higher or breaking lower. We have our support and resistance levels to watch and view accordingly. And then again, something's hinky because this is first, that's second, where it should be CPI, PPI followed by retail sales. They threw it CPI first, PPI, and then pushed retail to next week, right before FOMC. So these two events plus FOMC should give us more market direction, and we should see those levels of support or resistance break and the targets we discussed come into play. So with that, take care. God bless you. We love and appreciate you. That's it. That's all. We'll see you tomorrow.